Ladies and gentlemen, investors and seekers of financial clarity, today we gather to examine one of the most provocative questions circulating through the global metals community. Is silver on a trajectory that could send it soaring to $100 an ounce by 2026? It's a bold question, one that demands clear eyes, disciplined thinking, and a willingness to look beyond headlines to the deeper forces shaping our economic future. Silver has always been more than a precious metal. It is a store of value, a hedge against uncertainty, and perhaps most importantly in this era, a foundational industrial component. From solar panels and electric vehicles to medical technology and emerging electronics, silver plays a critical role in powering the future. As the world pushes toward electrification and green energy, demand is rising rapidly. Meanwhile, global mine supply is strained to keep pace, and new discoveries are increasingly rare. Silver's rising industrial demand has become one of the most significant and transformative forces shaping the metal's long-term outlook, and understanding this demand requires looking at how deeply silver is woven into the technologies driving the modern world. Unlike gold, which is primarily valued for investment and jewelry, silver has a dual identity. It is both a precious metal and an essential industrial material. This combination places it at the center of global innovation, economic development, and the transition toward more sustainable energy systems, making its demand far more robust and diversified than many people realize. One of the most powerful engines of demand comes from the renewable energy sector, especially solar power. Silver's unparalleled electrical conductivity makes it the ideal material for photovoltaic cells, which convert sunlight into energy. As countries race toward clean energy targets, solar installations have surged across the globe. Every solar panel contains a measurable amount of silver, and despite advances in manufacturing, no other metal has proven as efficient or reliable in this role. Estimates show that solar demand alone consumes hundreds of millions of ounces annually, and projections indicate that usage will continue to rise for years as nations expand grid-scale solar farms and more homeowners install rooftop systems. The more the world commits to renewable energy, the more silver becomes indispensable. Electric vehicles add another powerful layer to this demand story. EVs require significantly more silver than traditional combustion vehicles because of their electrical components, battery systems, onboard electronics, and charging infrastructure. From the wiring and circuit systems to the advanced safety features and driver assistance technologies, silver plays an essential part in the reliability and efficiency of modern vehicles. As automakers phase out gasoline engines and scale up EV production, the strain on silver supply becomes more apparent. With millions of new electric vehicles expected to hit the roads each year, silver's demand from the automotive sector is poised to accelerate sharply. Beyond solar and EVs, silver is crucial in countless everyday technologies that often go unnoticed. It is used in smartphones, computers, LED lighting, medical equipment, and even household appliances. In electronics, silver's conductivity allows devices to operate faster and more efficiently while generating less heat. As society becomes increasingly digitized, with more devices connected through the Internet of Things, silver consumption naturally expands. Even small amounts of silver in each device add up to enormous totals when you consider the scale of global production. Medicine is another surprising but important source of demand. Silver's natural antimicrobial properties make it valuable for sterilization, wound dressings, surgical tools, and healthcare equipment. As medical technology becomes more advanced and global populations age, demand in this sector also grows steadily. What makes this rising industrial demand particularly impactful is that much of the silver used in manufacturing is not economically recoverable. Unlike gold, which is often recycled because of its high value, silver is frequently used in small quantities across millions of products. Once these items are discarded, the silver they contain is often lost permanently. This means the market must continually rely on newly mined silver to meet global needs. When you combine these trends, clean energy expansion, rapid electrification, advanced electronics, medical tech, and the lack of large-scale recycling, you get a picture of a metal whose industrial importance is increasing faster than production can easily support. This imbalance is one of the core reasons many analysts, investors, and market observers consider silver's long-term price potential far stronger than traditional models suggest. Silver is no longer just a hedge, it is a fundamental building block of the future economy, and its rising industrial demand continues to reshape its market dynamics in profound ways. Silver's limited global supply is one of the most influential yet often underestimated forces shaping the future of the metal's price. While demand continues to surge across industrial, technological, and investment sectors, the ability to increase silver production is far more constrained than many people realize. Silver is not simply waiting underground in easily accessible pockets ready to be mined. Instead, its extraction is complex, costly, and frequently dependent on the production of other metals. This structural limitation forms the backbone of the bull case for silver, and understanding it requires looking closely at how silver comes to market, why supply growth is restricted, and why future shortages may become increasingly likely. Unlike gold, which is primarily mined for its own value, silver is often produced as a byproduct, most commonly from mining operations focused on lead, zinc, copper, and to a lesser degree gold. This means that even if silver prices rise significantly, mining companies cannot simply ramp up silver production in response. They make operational decisions based on the profitability of the primary metal they are targeting, not silver. In other words, silver supply is largely controlled by the economics of entirely different markets. When copper or zinc prices are weak, mining projects slow down, and silver production drops along with them, even if silver prices are climbing. This creates a built-in bottleneck that makes it extremely difficult for supply to react quickly to rising demand. Adding to this challenge is the fact that few large new silver deposits have been discovered in recent decades. The world has explored most major mining regions, and competition for new mineral-rich areas has intensified. Many of the high-grade ore bodies that once supplied a substantial share of global silver have been depleted or are approaching the end of their productive life. What remains tends to be lower-grade material, harder to access, or located in regions with political, environmental, or regulatory hurdles. As a result, new mining projects often face years of delays, high upfront costs, and substantial uncertainty. Even when a promising deposit is identified, bringing it into production is a long and expensive process. On top of geological limitations, environmental regulations have become stricter, especially in countries with large mining industries. While these regulations are crucial for protecting land and communities, they also add time and cost to permitting, exploration, and development. Some regions have even halted mining projects altogether due to political opposition or shifting national policies. This trend suggests that global silver supply could face additional constraints as governments become more cautious about allowing new extractive operations. A further issue is that existing mines are producing less silver each year as ore grades decline. This is a natural part of mining. After decades of extraction, the richest portions of a deposit are used up first, leaving behind poorer quality material that requires more energy, more machinery, and more money to process. Declining ore grades mean the industry must work harder to produce the same amount of metal, raising costs and narrowing profit margins. In some cases, mines shut down entirely because they are no longer economically viable. Compounding these problems, geopolitics can disrupt silver supply. Major silver-producing nations, including Mexico, Peru, China, and several others, have experienced political volatility, labor strikes, regulatory changes, and infrastructure issues that periodically reduce output. Since supply is concentrated in a relatively small number of countries, disruptions in any one region can ripple throughout the global market. While supply growth struggles, the world's thirst for silver is accelerating due to solar energy, electric vehicles, advanced electronics, and countless industrial applications. Many of these uses are non-negotiable. Manufacturers cannot simply substitute another metal without sacrificing performance or efficiency. The result is a market dynamic where demand is rising fast, but supply cannot easily increase to match it. This imbalance is one of the strongest long-term bullish signals for silver. When you have a resource that is increasingly essential to modern technology, yet structurally limited in supply, price pressure becomes almost inevitable. Even modest increases in demand can have outsized effects on the market, and as shortages become more likely, silver's value could be pushed to levels that surprise even seasoned analysts. In a world striving for electrification and innovation, limited silver supply is more than a constraint. It is a fundamental force that will shape the future of the metal for years to come. The influence of economic and monetary cycles on silver has always been profound, and understanding this relationship is essential for anyone trying to anticipate where the metal may be headed. Silver is not just a commodity, it is a monetary asset whose value responds to shifts in inflation, interest rates, global debt, and geopolitical uncertainty. When these forces align, they create a backdrop that historically drives investors toward tangible stores of value. Today, the world is entering a period where all these pressures are converging, setting the stage for silver to play a far greater role in preserving wealth. To begin with, inflation is one of the most significant drivers of silver demand. When the cost of goods and services rises, the purchasing power of fiat currencies declines. People begin to look for assets that maintain value regardless of what happens to paper money. Silver has always functioned as a hedge in these situations because, unlike currency, it cannot be printed or artificially expanded. In periods of persistent inflation, especially when governments struggle to control it, investors historically turn to hard assets. The current global environment, marked by fluctuating inflation rates and deep uncertainties about future monetary policy, is creating renewed interest in precious metals. Closely tied to inflation are interest rates, which central banks use to steer economic conditions. When interest rates are high, holding cash and bonds becomes attractive because they offer stable yields. But when rates are low or declining, the opportunity cost of holding precious metals decreases, making silver more appealing. Now consider what often happens when inflation becomes stubborn. Central banks may raise rates aggressively, slowing economic growth and sometimes triggering recessions. During these cycles, investors frequently seek safe havens in metals. Silver, with its lower price point and strong historical performance during monetary turbulence, becomes especially appealing to both retail and institutional buyers. Another critical factor is global debt, which has reached levels unprecedented in modern history. Many nations are carrying debt loads that can only be sustained through low interest rates, currency debasement, or financial engineering. When government and corporate debts expand faster than economic output, the long-term value of money comes into question. Precious metals, silver included, benefit when confidence in traditional financial systems weakens. High debt environments often coincide with larger deficits, aggressive money creation, and concerns about the stability of fiat currencies. These conditions create fertile ground for silver appreciation. Geopolitical uncertainty adds another dimension to this dynamic. Wars, trade conflicts, political instability, and shifting alliances can all disrupt global markets. During times of geopolitical stress, investors typically move into assets received as secure and independent of government control. Silver's portability, universal acceptance, and intrinsic value make it a reliable choice during such periods. Unlike digital assets, which depend on electricity and internet infrastructure, or fiat currencies, which depend on political stability, silver is a physical asset with no counterparty risk. Its value does not rely on the solvency of banks or the credibility of governments. Furthermore, currency devaluation has become a growing concern. As countries compete economically, they sometimes weaken their own currencies to boost exports or stimulate growth. This race to the bottom diminishes confidence in global currencies. When people sense that the money they earn is losing purchasing power, they increasingly turn to metals. Silver often benefits more than gold during these cycles because of its lower entry price, making it accessible to a wider population. Additionally, silver's dual nature, both industrial and monetary, gives it an advantage during turbulent economic cycles. While gold serves primarily as a financial hedge, silver receives support from industrial sectors even when markets fluctuate. This creates a unique scenario where silver can benefit from both defensive investment behavior and offensive industrial expansion. Finally, long-term monetary trends suggest a slow but steady erosion of trust in traditional financial systems. With digital currencies emerging, banking systems shifting, and central banks experimenting with new monetary tools, the world is entering uncharted territory. In such environments, investors often gravitate toward assets with deep historical roots. Silver has served as money for thousands of years, and its legacy as a reliable store of value lends credibility in times of transition. Altogether, these economic and monetary forces, rising inflation, fluctuating interest rates, overwhelming debt, geopolitical instability, and currency debasement, form a powerful combination that historically drives silver upward. When economic uncertainty becomes the norm rather than the exception, silver's role as a monetary safe haven becomes not just relevant, but essential. The potential for silver to experience significant revaluation in the coming years is a topic that continues to gain momentum among analysts, investors, and economists. While no one can predict exact prices with certainty, the convergence of multiple global forces suggests that silver could be nearing a period of profound market transformation. Understanding why this is possible requires stepping back from daily price fluctuations and looking at the underlying structural and economic pressures that could push silver far beyond its historical averages. To begin with, silver's value is heavily influenced by the balance between supply and demand, and both sides of that equation are shifting in ways that favor higher prices. Industrial demand is rising sharply due to the worldwide shift toward electrification, renewable energy, and high-tech manufacturing. Solar panels, electric vehicles, semiconductors, and advanced medical devices all rely on silver's unmatched conductive and antimicrobial properties. These industries are not optional. They are central to national energy policies, infrastructure plans, and technological advancement. That means demand is both resilient and likely to grow regardless of short-term economic cycles. At the same time, supply remains constrained by geological, political, and economic limitations. Silver mining cannot be scaled up quickly because a large portion of global production comes as a byproduct of copper, lead, and zinc mining. Even if silver prices rise dramatically, mining companies cannot instantly increase output since their production decline. Scions depend on the economics of other metals. This makes silver unusually vulnerable to supply shortages, especially in periods of high demand. When demand rises quickly and supply cannot respond, prices often experience sharp upward movements, a pattern seen several times throughout history. Another powerful force behind silver's potential revaluation is the growing recognition that many of the world's currencies are losing purchasing power. Governments around the globe have engaged in unprecedented money creation to stimulate economies, cover deficits, or respond to crises. When more currency is printed without corresponding growth in economic productivity, the value of that currency gradually declines. As confidence in paper money weakens, people begin seeking refuge in assets that cannot be debased. Silver's long-standing history as a monetary metal gives it a natural appeal in such environments. Additionally, silver's comparatively low price relative to gold creates an asymmetry that often leads to strong price moves. Historically, the gold to silver ratio, how many ounces of silver equal the value of 1 ounce of gold, tends to revert toward long-term averages. When silver becomes too inexpensive relative to gold, it often experiences rapid appreciation as markets correct the imbalance. This tendency suggests that silver may be undervalued at current levels, leaving ample room for upward adjustment. Investor behavior also plays a critical role in potential revaluation. In times of economic stress, market participants often shift from risky assets to those perceived as safe or undervalued. Silver benefits from both categories. It is considered a safe haven during crises, yet its lower price and high volatility also attract speculative interest. This combination can accelerate price movements when confidence shifts. A relatively small increase in investment demand can have an outsized effect on silver prices because the market is smaller and more sensitive than many others. Furthermore, technological innovation continues to introduce new uses for silver as emerging industries expand, such as advanced batteries, next-generation computing, and clean energy infrastructure. The need for silver becomes increasingly integral. When industries adopt a metal as a critical component of their manufacturing process, demand becomes predictable and sticky, supporting long-term price growth. Unlike speculative demand, industrial demand does not vanish when market sentiment fluctuates. Lastly, history has shown that when silver enters a true bull cycle, it often moves dramatically and far more quickly than most investors anticipate. Past price surges have demonstrated that once momentum builds, silver can experience rapid and sustained increases driven by both fundamental factors and emotional market reactions. Taken together, these forces, industrial expansion, constrained supply, currency debasement, investment demand, valuation imbalances, and technological growth, create a scenario in which significant revaluation is not only possible but increasingly plausible. While no price target is guaranteed, the structural conditions forming today suggest that silver's future may hold far more upside than many traditional forecasts assume. Preparedness is one of the most important ideas in the world of investing, yet it is often overlooked because many people become fixated on predicting exact outcomes. When it comes to silver, whether discussing the possibility of a surge to $100 or any significant price move, the conversation should shift away from certainty and towards strategic readiness. Markets are inherently unpredictable, shaped by a mix of economic shifts, investor psychology, technological change, geopolitical events, and supply dynamics. Trying to forecast a precise number or date rarely leads to success. Instead, the real advantage comes from being prepared for multiple possibilities. To begin with, preparedness means understanding that markets move in cycles, and those cycles often change rapidly. Silver has a long history of sudden price spikes followed by periods of consolidation or decline. These swings are driven not only by fundamentals but also by sentiment, speculation, and external shocks. Investors who focus exclusively on a single outcome, such as silver hitting a particular price, often miss opportunities or expose themselves to unnecessary risk. Preparedness requires acknowledging that silver could move higher, remain stagnant for a time, or even decline temporarily before gaining strength. By accepting this range of outcomes, investors can position themselves more intelligently and avoid emotional, reactive decisions. Another key aspect of preparedness involves recognizing the broader economic forces at play. Inflation, currency devaluation, interest rate fluctuations, supply shortages, and global financial instability can all influence silver's value. But these forces don't unfold in straight lines. Some move quickly, others take years to materialize. Being prepared means staying informed about these factors rather than assuming one path is guaranteed. For example, if inflation rises faster than expected, silver could benefit from increased demand as a safe haven. If energy transitions accelerate, industrial demand may spike. If geopolitical tensions rise, investment demand may grow. Prepared investors monitor these signals and adjust their expectations as conditions evolve. Preparedness also means building a strategy rather than relying on luck or timing. Many people wait until silver is already rising before taking action, often entering the market during emotional peaks when prices are less favorable. A more prepared investor develops an approach based on long-term objectives, accumulating gradually, diversifying exposures, and considering risk tolerance. This method helps avoid chasing the market or panicking during corrections. A disciplined plan is far more effective than trying to guess short-term moves. Another important element is understanding the potential consequences of extreme scenarios. Silver reaching $100 would not occur in a vacuum. It would reflect major economic shifts, such as severe currency weakening, major supply disruptions, or a surge in industrial demand. Preparedness means asking, what would the world look like if silver reached that level? How would other assets be affected? How would inflation, interest rates, or global markets react? These questions help investors think beyond price alone and consider the broader economic environment. That awareness allows for more resilient financial planning. In addition, preparedness involves managing expectations and emotions. Markets are notorious for creating excitement during rallies and fear during downturns. Emotional reactions can lead to impulsive decisions, buying too late, selling too early, or abandoning a sound strategy because of temporary price moves. Preparedness means cultivating patience, discipline, and perspective. It means understanding that long-term trends matter more than daily volatility. Another overlooked aspect of preparedness is liquidity. Investors sometimes underestimate the importance of having available capital during market opportunities. Those who plan ahead, saving, allocating wisely, and maintaining financial flexibility are better positioned to take advantage of favorable conditions rather than being forced to watch from the sidelines. Finally, preparedness means accepting uncertainty. Silver may or may not hit dramatic price targets within specie. Fixed time frames, but the environment shaping its future is undeniably shifting. By embracing a mindset grounded in awareness, adaptability, and strategic planning, investors put themselves in a stronger position regardless of how exactly the market unfolds. In essence, preparedness is not about predicting the future. It's about being ready for it. Whether silver rises sharply, moves gradually, or experiences volatility along the way, those who plan thoughtfully and stay informed are the ones most likely to benefit. Silver's role as a strategic asset has never been more important than it is today. While silver is often categorized simply as a precious metal or lumped together with other commodities, this perspective overlooks the unique position it occupies in the global economy. Unlike most assets, silver bridges two worlds. It serves as both an industrial necessity and a monetary refuge. This dual identity is what elevates silver beyond a mere investment choice and makes it a strategic asset with far-reaching implications for the future. On the industrial side, silver is indispensable to modern technology. Its conductivity, reflectivity, and antimicrobial properties give it a permanent place in critical industries ranging from solar energy and electric vehicles to electronics, medical devices, telecommunications, and aerospace. Every technological advance seems to lean on silver in some way, as governments and corporations push toward ambitious goals: clean energy adoption, digital infrastructure expansion, electrification of transportation. The demand for silver embedded in these technologies continues to rise. These are not speculative industries, but foundational sectors shaping the next era of global development. Silver's importance here is structural, and structural demand does not disappear with market fluctuations. At the same time, silver carries deep monetary significance that stretches back thousands of years. It has been used as currency, a store of value, and a hedge against uncertainty across cultures and civilizations. In modern times, when financial systems become strained or currencies weaken, investors gravitate toward assets with intrinsic worth. Silver's physical nature, universal recognition, and scarcity make it a reliable companion in times of monetary instability. Unlike digital or paper assets, silver cannot be created through policy decisions or printed on command. This independence from government control gives it a stability that becomes especially valuable during periods of economic stress. What makes silver truly strategic is how these two roles reinforce one another. Industrial demand creates a consistent baseline for consumption, ensuring that silver retains value even during periods of financial calm. Meanwhile, monetary demand tends to surge during periods of uncertainty, adding powerful upward pressure on the price at exactly the moments when investors need protection the most. This combination has the potential to create intense price movements when both forces align, something gold does not experience to the same degree, as gold lacks widespread industrial use. Additionally, the global supply structure further enhances silver's strategic importance. As mine supply becomes more constrained and recycling remains limited, the availability of physical silver becomes increasingly relevant. In a world where essential industries rely on silver and investors view it as a safeguard, any supply disruption could create significant challenges. Manufacturers depend on consistent silver availability to produce electronics, solar modules, medical systems, and vehicles. Investors depend on silver's scarcity to preserve value. This creates a rare situation where both the industrial and monetary worlds are pulling on the same constrained resource. Furthermore, silver offers accessibility that other strategic assets often lack. Its lower price compared to gold allows a broader range of individuals, both small investors and larger institutions, to participate in the market. This democratized access makes silver a widely held asset during times of uncertainty, contributing to higher liquidity and deeper market engagement. When economic shifts occur, silver becomes a tool not just for the elite or institutions, but for everyday people looking to strengthen their financial resilience. Another element that reinforces silver's strategic character is its growing relevance in discussions about energy independence, climate policy, and technological sovereignty. Countries aiming to compete in renewable energy or secure control over advanced manufacturing rely on a steady supply of silver. This makes the metal part of broader national strategies where access to materials can influence economic and geopolitical stability. Ultimately, silver's importance extends far beyond speculation or short-term trading. It is a foundational asset that supports emerging industries, protects purchasing power, and contributes to national security interests. Its dual role positions it as one of the most adaptable and future-proof materials available. As the world continues to undergo rapid transformation, silver's place as a strategic asset becomes not just relevant, but essential.